This is Craig Haugard with your Financial Issues Ag Update. Well, Friday saw corn prices rise on strength in the soybean market and concerns about dryness in South America. The extended weather outlook suggests a drier pattern for southern Brazil and much of Argentina, and that was supportive to corn prices. We also received some support from the recent decent demand that's been noted, as well as the weaker U.S. dollar. In soybeans, the momentum higher continued on Friday as we made new life of contract highs and then closed fairly near those highs. The market was driven by weather, which remains a concern for Brazil and Argentina. There was some chatter coming out of Argentina about possibly switching bean acres to corn acres because of the dry conditions in that nation. Now, the soybean crop in Argentina is currently 68% planted, so it is possible to see a significant number of acres switch from beans to corn if Argentinian farmers decide that they need to go that route. The wheat market on Friday was mixed, with Minneapolis slightly higher, while Kansas City and Chicago were just a touch weaker. We saw a little bit of profit taking after the recent run-up in the wheat market. We also have a lot of uncertainty in this market right now about whether or not the Russian exporters are going to push exports prior to that February export tax and quota limits going into effect. Now, the weakness in the U.S. dollar helps make the U.S. more competitive in the world export arena, and in the long run, that should be good for prices here in the United States. Cotton futures spent Friday consolidating in a very narrow trading range. At the finish, we had March futures down 15 points as they settled at 77.04. Livestock futures turned in a mixed session. February live cattle ended the day 40 cents higher, while March feeder cattle were down 30 cents at the close. After the close, we had the monthly cattle on feed report. Cattle on feed on December 1st were 100%, while placed on feed came in at 91.1%, and cattle marketed were 98.3%. All of the numbers were at or slightly below the average trade guess. Lean hog futures on Friday were a bit stronger, with the February futures 30 cents higher at the close. Class 3 milk futures were as much as 32 cents lower during the session before coming back, still closed lower, but closed near kind of the high of their trading range for the day. At the close, we had the January futures down 8 points as they settled at 15.56. The USDA milk report for November showed that in November, 12,000 cows were added to the dairy herd. In October was adjusted to add an additional 5,000 for a net increase of 17,000 head in the U.S. dairy herd. Milk production grew by 3% over 2019. That's the largest year-over-year increase that we've seen since 2014. Meat cutout values were mixed. Choice boxed beef was 88 cents lower, closing at $208.63. Select boxes were 57 cents higher as they settled at $194.27. Pork carcass cutout values lost ground, ending the day $1.75 lower, finishing up at $71.47 per hundredweight. This has been Craig Haugard with your Financial Issues Ag Update. We'll be right back with more financial issues after this.